Afternoon, ladies and gents. Simon Brown here doing introduction for Alec Hogg. But before you go any further, let's just check that you are receiving audio, that you are seeing the images on the screen. If you can hear us, if you can see us, just raise your hands in the GoToWebinar application. Brilliant. Hands coming up plenty. We're winning. So this is a kickoff of the BizNews Global Share Portfolio, a collaboration between Standard Online Share Trading, their web trader, which is their international platform, and Alec Hogg from BizNews. I don't think any needs any introduction, so I'm going to kick it off with there. We're going to do monthly updates. This will be the first, and we'll pick up December and again in January after the holidays. About 30 minutes. You've got questions, drop them into the Q&A box. We'll take the questions at the end of the presentation. But with that, Alec, over to you.
Thanks, Simon. I was called a webcast virgin this morning. I've been called a virgin for quite a few years, but it is a real pleasure to be with you today, and I hope that we can shine a little bit more light on why I've gone with various stocks in the portfolio, the structure of the portfolio, and just to take it a little bit further. So let's have a bit of fun. Do send through those questions. As Simon says, we're going to be with you for about half an hour in total. I'll take you through a presentation for the next 20 minutes, and thereafter we'll go to those questions and get forward on it. Let's start off with the first of the excuse me, with the first of the graphs, and there it is. Why do we have this portfolio in the first place? Well, it's a 3-year dollar rand graph, and you don't have to be a genius to work out which way it's going. If you go back to around the beginning of 2012, the dollar was would buy you R7.50. Now it's just under 11. And unfortunately, my view on this is that it isn't going to get any better for the rand, that is. Just a few reasons why. The way that the economy is being handled at the moment is pushing us into a weak currency, not indefinitely, but certainly until things get changed. My view on this is that the ministers who are managing the economy, Rob Davies and Ebrahim Patel, come from a mindset which is well entrenched in Sussex University in the UK, known as the most left-wing university in the United Kingdom. It was had a very close relationship with the ANC during the years of apartheid, and it remains the philosophical home for many of those who are running the country at the moment. Ministers Davies and Patel come from a socialist/communist background, and they believe that command and control is the way to do it. It hasn't been a success in most parts of the world in the modern economy. I don't think it's going to be a success in South Africa. We know that the likelihood now with Eskom going to be knocking back more of the power problems for the rest of the year is we might not even get to 1% economic growth this year. We have inflexible labor issues. Again, that's entrenched in the psyche of the ruling party in South Africa. It doesn't matter what the World Economic Forum, the International Monetary Fund, the World Bank, you name it, tell us about inflexibility of labor. The penny is not dropping. And as long as it doesn't drop, look forward to a continuation of more of the same. Nkandla, of course, that's an issue that I don't really need to go into much detail on, excepting to say that it does send a very strong message to people in other parts of the world about South Africa and about the rand. Last-minute legislative changes, we had quite a lot of those coming through in the oil and gas industry. It might seem like a good idea and they might be well-intentioned. The problem is it chases away foreign investors who need to have certainty and, of course, raising of corruption, etc. So I'm not going to go into more of those details. I think we all know them pretty well. But the reason I decided to articulate that for you was just to give you a understanding of why I've turned extremely bearish on the rand in the longer term, and I think that the fundamentals always do catch up with us. So that's where we are as far as the currency is concerned. So if you want to get a hedge against the rand, of course you can invest on the Johannesburg Stock Exchange. We know that around 70% of the earnings of South African of the South African indices now come from offshore, but to get a more pure investment, clearly it would be through investing abroad. Moving on to the next the next kind of part of this whole presentation, there is the BizNews Global Portfolio. I'm going to go into that in quite a lot of detail, and also why the portfolio is structured in the way that it is. But you'll see there that the target for the percentage is to have around about a third, 30%, into the S&P 500, the Vanguard. I'll tell you why we selected that in a moment. 15% each in Berkshire Hathaway and Google, and then 8% at the moment, NovoNordisk, IBM, and Amazon. We haven't got there on any of those yet, and the reason for that will become apparent in just the next couple of minutes. The timing of the purchases, I'm trying to employ the key principle on investing, which is avoid market timing. None of us know when the market is going to go up or down, but if we have a approach which will stagger our investments over a period, that will make it or reduce that risk significantly. So the timing of each purchase in this portfolio is over 3 months. So far we've made a couple of purchases already. So they started off in the beginning of October and a couple more towards the end of November. So for some of the constituents of the portfolio, we've had 2 slugs, if you like. We'll only be getting the 3rd slug in that regard at the end of November. There is a nominal amount or a notional amount of $200,000 in this portfolio. We've added a new stock to the portfolio in this period, and that's clearly been one tranche of it. And the structure of the portfolio, just to go back a little bit, sorry, I'm going a little ahead of myself, is to just going back to that, the overall portfolio there is to have 5 individual shares. So you'll see there's NovoNordisk, IBM, and Amazon. They are 3 of what we would call share selections, in addition to Berkshire Hathaway and Google, who the foundations of the portfolio, together with an ETF. I hope that just becomes a lot more understanding as we go forward. Starting off with the ETF, which is Vanguard. Vanguard is the biggest in the world. It was created as an exchange-traded fund by Jack Bogle. He's 85 years old now. He's still carrying on, but he has argued for decades about the superiority of index funds over mutual funds. And the real argument that he puts forward is that if you take a market as a whole, 50% of the investors are going to do better than the average, and 50% are going to do worse than the average. That's just arithmetic. If you then take an actively managed fund, if you add to it your costs, it means that your actively managed fund managers, 50% of them you're not going to have a 50-50 split anymore, because you have more costs. And as a consequence of that, roughly 30%, if you're lucky, of actively managed funds beat the index every year. To try and pick those funds is almost impossible. You can have a good run with a particular fund manager over a period of time, but for most investors, a much smarter way to do it is to allocate resources into an exchange-traded fund. And indeed, at the Berkshire Hathaway AGM this year, Warren Buffett was asked this question. In fact, it was put to him in a rather critical manner. Why did he tell I think it was on CNBC, that he would put his wife Astrid's funds into a Vanguard S&P 500 ETF rather than into Berkshire Hathaway, said one of the shareholders. And he said he likes to believe that when he's gone, that his wife will sleep well at night. And you truly can do that if you are taking away all of the vagaries of a market by investing in an ETF. We've gone for the Vanguard S&P 500 ETF. It is not, you got to be a little bit careful about it. It's VOO:ARCX. There's quite a few, in fact, not quite a few. There are many ETFs on the Standard Bank portfolio. So go for that one, VOO:ARCX. It's 30% of our portfolio. Why did I decide to do that? Because I think that you need a few building blocks. This is the most obvious of them, and it also is going to be giving us a feel for the way, or rather a direct correlation with the way that the American stock market is performing. Again, why not go for a world index? Why go for an American index? Well, I'm a believer that there is no left wing and no right wing in politics. There's just those who would like to unleash human potential and those who would like to tell humans how to act. And no constitution in the world, perhaps with the exception of South Africa's constitution, which hasn't really been employed the way that it should be just yet, but no other constitution in the world unleashes human potential quite like the American constitution, which was written in the late 1700s. And the American way is to unleash that potential, which then creates wealth, and it's been the most magnificent wealth creator over the last 300 years. Evidence of that is 5% of the people are American, 25% of the world's wealth is with the United States. In fact, 50% of the global market cap is in the United States. So I'm quite happy to run with the best performers in the world. On to our next constituent, and it's going to get to 15% of the total portfolio in time. Remember, we're buying them one-third, 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 and that's Berkshire Hathaway. That's a picture I took of Warren Buffett on the left and Charlie Munger on the right. As you may be aware, I'm a regular visitor to the Berkshire Hathaway annual general meeting, have been doing it for the last 10 years. I read a lot about Buffett. I love his approach to life, very logical. It's a $345 billion market cap company now, which was started 50 years ago next year, or rather it was taken over 50 years ago next year by Buffett and Munger, and they've built it from a near bankrupt New England textile operation into the 5th highest market cap company in the United States. What I like about Berkshire Hathaway is that in many ways it's a investment trust that is not fulfilling its full value, and the reason for that is that they put the value of their subsidiaries in at cost, not they don't adjust it into the market area. So you would have the obvious subsidiaries that they bought recently, like BNSF, would be very close to their market value. But there are many others, like Geico, which is the American version of OUTsurance, which is in the portfolio at a fraction of its true value. So you are buying Berkshire Hathaway because a big chunk of this company is in fact unlisted. You're buying it at a nice discount. These are really good businesses that are managed in the way that Warren Buffett tells us about. They have $40 billion in cash. They've got a wonderful relationship now with a company called 3G Capital of Brazil. They did a deal on Heinz there, and they're going to be unleashing a lot more of that cash into partnerships with 3G, and a portfolio of $100 billion, which is very focused. In many ways, like our portfolio is focused in this way, because Buffett is one of the guys who says, if you are going to have a portfolio, try and put all your eggs into one basket, but just watch that basket very closely. We're doing that in the BizNews portfolio as well. Berkshire Hathaway is happy to buy back its shares at about $130 level. It's sitting at $140 at the moment, so it's almost like you've got an underpin for this stock. Very happy to have 15% of our portfolio in that counter. This is a picture that is most unusual. For many years at the World Economic Forum in Davos, the South African contingent sponsored a bar at the Belvedere, kind of the meeting place of the rich and famous. And then a couple of years ago, I suppose budget pressures here in South Africa meant that somebody else came in to take over, and that was Google. It's now called the Google Hangout at the World Economic Forum. I thought there's a picture that you're not going to see every day. But Google is a business that has a $382 billion market, $382 billion rather market cap, bigger even than Berkshire Hathaway. I started getting excited about this company 3 or 4 years ago when a question was posed to Warren Buffett at the Berkshire Hathaway AGM about Google. And he responded to say that it was the one company that he hasn't been able to find a way of beating its business model. Now, this is not just anyone's comment, although Buffett is not an investor in technology. Do remember that every Wednesday, I think it is, he plays bridge online with his dear friend Bill Gates, and you can be sure that during hands they will be discussing various issues like the Google business model. They haven't been able to crack it. They haven't been able to find a way around it, and I don't think that those of us who are a lot more removed than Bill Gates and Warren Buffett are from business models will be able to either. if you have a look at value investors' portfolios around the world, you'll be surprised to see that many of them carry Google as well in their portfolio. And although the share price has been a little volatile of late, Google is still one of those stocks that is a cornerstone in a long-term portfolio, and I'm very happy to have 15% of the BizNews portfolio there. The most recent update from Google was on the 16th of October, where the third quarter results to the end of September were brought out. Revenues year on year were up 20%. So that's in US dollar terms. They're running at a margin of 27%. And the net income there, nearly $3 billion per quarter. This is a company that is not getting it wrong. They're doing an enormous amount right. They're looking at changing the world. In fact, if you go into BizNews now, you'll see a wonderful interview that the Financial Times of London did with Larry Page, the co-founder of Google. And they've restructured their management so that Page can be freed to do more strategic issues, to change the world. They have driverless cars at the Google campus that have done hundreds of thousands of kilometers already in Californian roads. This is a company that you just got to have in your portfolio, and I like it enough to have 15% of ours there. Moving on to Amazon.com. Our initial purchase of this stock was rather unfortunate. Just before the results came out, the share price dropped 8% as a consequence of that. It's clawed back as in the last little while, but at one point you could have got them at $288 a share. It's now back above $305. Jeff Bezos is a man that I've studied a lot recently because he made an investment into my sector, the media sector. He bought into the Washington Post. And the more I read about this guy and the more I look at his business model and his communication with shareholders, the more I like Amazon.com as a long-term investment. It's got an irresistible business model. It's not distracted at all, even though some shareholders seem to, or some investors, or should we call them traders rather, seem to think that they are. And he has an absolute laser-like focus on customers, and that shines through Amazon throughout. It's not a company where you're going to get dividend streams, but then again, you don't get that from Berkshire Hathaway either. I love Amazon, but it is one of our 5 individual share selections. Remember, this portfolio structure, 30% is in an ETF. Another 30% is split between Google and Berkshire Hathaway, and the final 40% will be split with 8% in each between 5 share investments. The average length of holding in this portfolio is forever. So when you make a bet that if the stock market closes for 5 years, you'll be quite happy to have them in your portfolio. I'd be very happy to have Amazon. Moving on to our next, my apologies, I'm doing a little bit of finger trouble there. NovoNordisk. What the heck is that? Well, that's a picture, if you look at the gent on the left, of Jean-Pierre Verster. He made 100 million rand on his bet on Able. And next to him is Robert Weiner. Robert Weiner is a gentleman that I met with Jean-Pierre Verster and a whole bunch of South Africans at the Value Investors Conference in Omaha this year. He has a portfolio of only 10 stocks, does Robert Weiner. He's based in Switzerland. He was asked to come along and present at the Value Investors Conference, and I was most impressed by him. Last year, he bought 1 share, and that share that he added to his portfolio was NovoNordisk. I've done my own analysis into it, and let me tell you very briefly. It's a Danish company which has 50% of the manufacturing of diabetes insulin. It is the world's number 1 in this field. And what is so attractive about insulin is that, for one thing, NovoNordisk presents it in a very low cost, high volume manner through pens. Now, if any of you know of people with diabetes or indeed have it yourself, you'll know that it's not the easiest thing to get analyzed. You go back to the doctors many times, and eventually you will decide on what the right level of insulin is. If you've got 50% of a market where the switching costs are high, not just in pricing, but in terms of time, then you must know that you're in a good place. NovoNordisk has always been expensive. It's always traded at 18 PEs. But again, if the market were to be closed for 5 years, are people going to eat less? Are we going to have less obesity? Are we going to have less diabetes? I doubt it. When I just look around my travels around the world, people seem to be getting a lot fatter, and that is reflected in the diabetes pandemic. At the end of 2012, there were 370 million people worldwide who had it. The projection is that there will be nearly 600 million people in 2035, many of them Chinese, and there's not much chance of that reversing itself, because in China the poor air quality means that people there are not keen to do too much exercise either. NovoNordisk has an internal profit target of 15% operating profits per year, so they aren't ripping the backside out of the business. They are continuing to innovate. More than 200 engineers who are looking at this. I really like the story, and we've put that into our portfolio as well. So that's the portfolio that you might have read about on BizNews in the past. In this period, in the past month, we have added IBM. Now, Nick Norman Smith, a high-quality asset manager here in South Africa, put me onto this one. He sent me lots of reasons why he likes IBM. I like it even more after the decline in the share price recently, and we'll go into that in just a moment. But IBM has moved its business model from pushing boxes and hardware to high-margin services and software business. The more research I've been doing into this one, the more I like it. And it is also one of our share selections. So those are the three stock picks, if you like, that are in the portfolio: NovoNordisk, Amazon.com, and IBM. Then it brings us to where the portfolio is. I took this picture last night, and you can have a look at it from the side. We are obviously, these are all long, and we can go into the portfolio in just a moment on the web trader side. But you can see there that it hasn't been a very happy start for Amazon or for Google, both of those being purchased at a time when the share prices, or just ahead of the share prices, falling in the past month. I'm very comfortable with those two. Berkshire Hathaway, we've just bought some more shares there, so there's a bit of trading costs in that one. And the Vanguard S&P 500, again, we bought a little bit, or increased the position a little bit, so that's gone up as well. I'm going to just switch across now to the live portfolio on the Standard Bank Web Trader fund, and there you can see it at the top, the open positions as they are. It's really a repeat of what we had a moment ago, but very clear that there is it's very, very easy to track, and you need to also be aware of the codes for the various constituents of that portfolio, and they're all pretty easy. Amazon.com. In fact, let's just do it with you so that it's easy enough for you to pick up how this works if you're a newbie at the game. Placing the order there, it's AMZN:XNAS, and that after the colon, the XNAS, that means it's listed on NASDAQ, and AMZN is obviously the share code. Similar thing there with Google. Let's have a look at him, at that one rather, very quickly. See, I'm still also working my way around here. If I were to place the order today, we've gone for the Google C shares, GOOG:XNAS. And then the Berkshire Hathaway, you'll see that we've actually had two purchases of Berkshire Hathaway so far. The first long, 75, we bought the first 75 shares. There you can see the price if you go along there. At 139.87. There's another 139.87, down very slightly, but that's primarily dealing costs. So we've now got 150 in the portfolio. NovoNordisk as well. We've bought 200 of those. We're now showing a nice profit on the one lot, but a little bit of a loss on the first. Remember, the first investment in these portfolios was done at just ahead of that crack that we saw in the market last month, and then on Vanguard. Similarly, there's been a couple of shares. Let me just, there we go. A couple of purchases, and both of those are actually doing quite nicely. All right, Mr. Simon, how are we doing with the questions?
Thank you, Alex. Folks, if you've got questions, drop them in the Q&A box. We've certainly got a little bit of time to take them. The first question is, when is the next update My memory is it's the first Monday of December, and I don't know what that day is. But whatever it is, first Monday, Marsha will have that up for booking on the site later in the month. Have we recorded? We have. That will be on the website sometime tomorrow. Question coming through, Alec. In terms of stocks, you've only got a couple of stocks. You're not worried about concentration in those few stocks. Will you look to add to the list of stocks over time?
It's a very good question. What I've tried to do here is to give us a cornerstone in the S&P 500. So it's almost like we've got the ETF. We have around a third of our, or will have around a third of our portfolio in that Vanguard ETF. So that gives us a wide range of stocks there. Berkshire Hathaway, to me, is also a reflection of the. It's almost like an S&P 500 in its own weightings, given how big it is today with 350 billion rands market cap, and the fact that Buffett has also got his own portfolio, which is a 100 billion rand portfolio in there as well. So I'm quite comfortable that it's like you've got another ETF reflecting the overall performance of the American market in Berkshire Hathaway. I love Google. I absolutely love Google. So I've gone with that as a cornerstone of 15% of the portfolio. And then we're going to have 5 other shares. So I've still got 2 more to find. But remember that the idea of this portfolio is your average holding time is forever. So you can be sure that as with IBM, NovoNordisk, and Amazon.com, these will be shares that I'd be happy to hold if the market were to close for 5 years. I think we've got quite a good spread there.
Question coming through, great question around dividends. You're obviously going to receive some dividends from the various stocks, not Berkshire, they don't pay dividends, but aside from that, are you going to, if you get a dividend from IBM, will it go back into IBM, or will you pull the dividends and maybe decide that Amazon's looking extra juicy, so it goes into Amazon, even though the dividends may have come from other areas?
I'm going to try to be as focused as the ETF people are, and have the portfolio structure to be reflected at all time of 30% in Vanguard, 15 in Berkshire and Google, and then 8 in the other 5. If, for instance, we were to get dividends which would change those ratios too aggressively, or if one of the share prices were to run ahead of the others, there's not a lot you can do about that, but you can bulk up those that might fall down. So for argument's sake, if we were to get a good dividend stream coming through and IBM was sitting at 6% rather than 8%, we would put those funds into IBM.
And then the inverse of it, what happens if IBM doubled in value tomorrow? Not going to happen, but if it becomes overweight in the portfolio, will you sell it down, or will you let the rest sort of catch up in a sense with what you've just mentioned?
No, definitely let the rest catch up. There's no intention here of selling. I'm going to try never to sell. Of course, it is a long time, and I know you've got a webcast coming up talking about exactly that point, Simon. There does come a time when industries change, where there are structural differences, and you need to then readdress it. But for the moment, and with the portfolio, with the stocks that are selected, if you look at them, leaving Berkshire Hathaway and Google out of the picture for a moment, IBM is extremely well placed for the next 5 years at least. NovoNordisk, well, if people just stopped eating, I guess it might be in trouble, but that's unlikely. And then with Amazon.com, I think it's a very good long-term investment. The structures, there is a potential that there will be a structural change. If that were to happen, then we would have to reassess. But for now, I can't see it.
Byron's asking for the Vanguard code again, and I know you gave it to us and it slipped my mind too.
It is VOO, and it's very important to Byron to actually get this one right, because they do have hundreds of ETFs in Vanguard, but it's the flagship one. It's VOO:ARCX.
ARCX. There we go. VOO:ARCX. Sending that through to everyone. A couple of questions coming through in terms of can we follow and the like. Yeah, so I mean, Alec's been writing on his BizNews.com. That's been coming through as well. Obviously, we will do these monthly updates around the portfolio. And this one perhaps a bit more chunky because it's setting the scene and the like. But we will be back every month, even if they're maybe a little bit shorter. As I said, next one will be early early December. Then we'll pick up after the holidays. But Alec will also be putting content out on his BizNews, so you will find it there at the same time. And ladies and gents, I'm not seeing any more questions coming through, and we have almost bumped up on our 30-minute limit that we set ourselves. So we leave it there. Alec, really